What's up, everyone? Welcome back to the Barber Block Podcast. I am your host, Lamar Harris. This is episode number 4. I welcome you to watching us, checking us out, and hope you get some good value out of today's show. It is a very special show, this episode. We're kind of departing away from the barbering industry for just a moment, and we're going to talk about finance. We're going to talk about home ownership. And today, my very special guest is not only a special guest, but she's also a dear friend of mine, and her name is Miracle Mortgage Misty. She hates that, but that's what I'm going to call her because she can make a miracle for you.
Hi, guys. So nice to be here. I like this. My name is Misty Crockett. I'm with Barber Financial. I am a senior loan officer. I've been in the business for 22 years.
God damn.
Right. And for me, I work at a brokerage. The special thing I think about that, this is how I got started in the industry, was working in the broker world. And what I liked about it was we were able to get the things that the consumers were looking for. So everybody hit you up, hey, I want this rate, or I want this kind of loan. Oh, you can't offer it. I have to go somewhere else. Well, I'm that person who finds that something else for you. Gotcha. It's a one-stop shop. Hey, I have, XYZ credit and I can't get a traditional loan. Is there something you can help me with? That's what I do. So awesome. That's the one thing about, being at a broker.
Yes. So this is why we call her Miracle Misty. Because she can find those things that other brokers, other loan officers cannot find. Those programs, regardless of your credit, whether you're on the low end or the top end, she can help you get to your home purchasing needs. So I wanted to talk today because a lot of our viewers are barbers.
Right.
And so they're not W-2 or the traditional W-2 employee. And some of them are, maybe are just now starting to kind of position themselves or track their money, how much they're making and things like that. What sort of things are needed in the beginning when you're talking just, like someone getting started into the home purchase process? What's needed?
So the main thing that people talk to me and are always concerned about is going to be their credit. That's always going to be the first thing because a lot of people don't track it, especially when you think this is not a path that you can go on because of the type of employment you have, right? So a lot of people assume I get paid cash, I can't buy a house. So you're not really, cash is king. That's right. That's what we're taught, right? But at the end of the day, you need credit to purchase a home. So we go over credit first. And once we've established qualifying scores and that kind of thing, then we go into the whole income and how you get paid and what we need in that case.
So going back to you mentioned the credit. If someone were to come to you and say, hey, Misty, I don't believe, or you just discover that they don't have the qualifying scores, what do you do at that point? Do you help them to get there, or do you give them advice, or do you have partners that will help them to achieve those scores?
So I do partner with some credit repair companies. I myself don't push credit repair. There are things that I can see on the credit report that could be done to increase your score. And when we pull our credit through a third party, there's a tool in there that tells you, if you pay this credit card down or remove yourself as an authorized user on this card, it can increase your score XYZ points. So I usually start off with a soft pull credit. So it's not something that's going to give you an inquiry, but it's going to give us your true mortgage score. We could see what we can do to increase your score to, the next tier, or you could just be right below qualifying. So it could be something small. So to me, there's not any sense of, going to credit repair for 6-7 months when it could be something as simple as, hey, just pay your Capital One card off or down $10. You know what I mean? Because a lot of people feel like they need to pay everything off. But that's not how credit works. Like, you have to manage it. That's how you get your score. So we kind of go over that first, just the basics of credit, because we're not digging deep because that's not what we're here for, but there's a lot of tools that I have access to that can get you to that next level without paying too much or going into a whole program for XYZ months.
Yeah, I remember specifically in my case where you told me we were authorized users on a credit card for the business, and you said take that off because the utilization rate was high. And so you said get that off of your credit, get off as an authorized user, and immediately our scores went up. And to get us, past qualifying scores. So, sometimes we see those things on our credit, and it's something that we may not even need to do. It's just some of the little things, small things that can be done easily and quickly to get our scores up and get us in a position to purchase. And so what would you say to someone who is kind of just getting started? They have no credit.
Okay, like nothing.
They have nothing. They've never taken out a credit card, a loan. They've just been
Cash
everything.
So I always suggest a secure credit card. Secure credit card is going to be your best bet. You can always get yourself added as an authorized user, but that's great. It's just not your credit history.
Right.
So I did have a scenario once where a young man had 2 credit cards, but he was an authorized user. He had a very low score, and it wasn't super low. It was still qualifying. Ran him through the system, and I couldn't get him approved. And it was really because he didn't have his own credit. Because even though he obtained that history on that credit report, there was nothing really showing what he can manage. So the system at that time, and this was many years ago, did not give me an approval. So we turned around. I told him to get a secured credit card, $500 balance. Use that card one time at least. We reported it. It did take us 3 months, I think, for that history to kind of show where I was able to finally get him an approval. But a secured card is going to be your best bet because now you're fronting your own money. It's secured against your own funds. And that is already, it weighs higher, I think, as just a regular credit card.
Right.
But that's always step one when you have no credit.
Yes.
Not run out and get a car.
and you'd be surprised. I'm sure you see that a lot. Someone who's in the process and they go and buy a car, which they think they might be helping getting a trade line on their credit report, but it really could be hurting them.
Yeah, it's nice to mix it up, but not when you're looking for a house. Because now a credit card, the minimum payment on a credit card is going to be low,
right?
Considering how the balance is, your limit is. But a car, the payment is the payment. So we don't like that low payment and that's another thing that people don't understand is. It's not the balance of your credit cards that affect you. You can have $1 million on a credit card, but if your payment is $20 a month, that $20 a month is what affects your debt to income ratio. So it does not matter how high your balance is. Obviously, you don't want to be a max because that's going to affect your score. But it's the payment that that matters on your debt to income ratio.
And now you're mentioning debt to income ratio. Maybe explain. So what that is.
The debt to income ratio is basically your debt and your income divided. That gives us what your qualifying debt to income ratio is. So obviously the more income you have and the less debt you have, you're going to have a lower debt to income ratio. If you have high debt, low income, not so much qualifying. So when you add on anything, a firm, when you're going out and getting these Affirm loans and those report on your credit report. Those little things matter. So you can say, oh yeah, well, they're only $10 each. Yeah, but you got 70 of them. You know what I mean? Like that starts to add up.
Right.
All those little things, installment loans, your student loans. I know a lot of people, we're in deferment. I know that. We all know that. But there's still a payment that's going to be attached to that at some point. So, you always have to make sure whatever you're doing and adding to your credit report is going to be something that's manageable based on your income.
Awesome. And so my next question is what has been the youngest age of a customer or a client that you've had?
I had a 19-year-old.
19.
Yeah, and the one thing about him that was good is his parents did add him as an authorized user for a while. And then when he turned 18, he got his own card. So by the time he had turned 19, he wasn't in his career. He had obviously went to high school, but he did go straight into the workforce. He didn't go to college. So there were no student loans or anything of that matter. But he had money saved up. He had some pretty good credit history, but he was just young and they just set him up right.
Yeah. So what you're telling me is that the age doesn't matter because a lot of people think that, I can't buy a house until I'm 30 or 40 years old or even qualified. It's really not about that. But now given the state of things now, the market we're in, prices are still kind of high on homes. And, have you found it harder for people to qualify for mortgages at this point, or what are you seeing in the market?
So I am coming across where a lot of people can't qualify now that the housing prices are starting to adjust, and things are coming down here. I do have a lot more approvals, and FHA just made a change on their mortgage insurance, where the upfront mortgage insurance used to be based off 0.85, now it's 0.55. So that's helped. That takes off, more than $100 typically on your monthly payment. So that's allowing people to qualify more, even with the higher rents, though. And I think rates. I'm sorry. I think people are, for a while, we're still stuck on. I could have got a 2% last year.
Right.
We're past that.
That wasn't normal.
That was not normal. I don't know how that happened. I have no idea, but that wasn't normal. So what I'm finding now is, a lot of the people who did come out here and they sold their homes wherever they came from, and they came out here and they bought their new home for $20, $30, $50, $60, $100,000 over asking price just to get into a home. Their payment is just about the same as whoever's buying the house at the price of the actual home and the higher rent. So, the higher rate, you know what I mean? So even though they have a 3% over here and you have a, 6.5, your payments are still the same, but you paid what the house was worth. They overpaid. You know what I mean?
Gotcha.
So
because the prices are coming down.
Exactly. So nobody expected anything like that to happen. It just happened.
Yeah, it was crazy because that can be discouraging. I know for us, we were in the home building process. And so, we thought, we're going to qualify for this, and, their payment is going to be this. And then things happen, supply chain issues, and prolong the building process. And so now here we are 2 years later, still with no house.
Yeah.
Right. And now interest rates have doubled. Right. And so now that means the payment is double too. So we're like, what the hell?
Right. What do I do? And
what do I do?
There are programs where you could, lock your rate in and shop your loan, but that's not ideal for.
And they charge for that.
They do. You pay for that. Yep. You pay for that up front. There's a charge for that. But it only goes so far out. It doesn't go 2 years. You know what I mean? So there is a limit to how far it'll go, but I don't know how that would have, that definitely would have helped in your situation. And it's hard with a new build because, it'll be done in December. We met March. We met July. So you never really know when your house is going to be completed. Those dates sound familiar?
Yes. Yes. So do you work with a lot of builders directly in helping them? Because I know a lot of builders, they have their own mortgage companies. And then I guess if they can't do the deal, they'll outsource it. Are you on that list too?
I'm not on any of the main ones, the bigger ones, because they have their whatever set already. The smaller ones, I'm finding that they either have a few banks that you can go with or find whomever. So I'm actually in the process of talking to a company here in Gilbert and in Scottsdale to see how I can get attached, because there are, in that price range, there are special loans, doctors have special loans. There's a lot of self-employed people, and those banks that they work with don't really offer special programs. So they just send them on their way to find their own financing. And I'm like, no. Call me. I could help. And actually, Daryl and I went to a new build, and we had just walked in because we're nosy like that. Yep. And we wanted to see the floor plan, and that's how I got the information. So I was talking to the gentleman. I'm like, what bank do you use? And it was 3 top retail banks. And I'm like, so what about when you have, I don't know, self-employed or a doctor? He's like, well, yeah, we have them find their own thing. I'm like, this price point? These are, what? He's like, yeah, call this number. So he gave me all the information, and that's actually what I'm in the process of doing.
Awesome. Yeah. So when it comes to self-employed, dealing with the self-employed customer, or client, what has been the biggest challenge when it comes to that?
Their tax returns. So we, as self-employed people, typically write off all of our things because nobody is out here trying to pay hundreds of thousands of dollars to the IRS. That's just the reality, right?
Right. So
a lot of people will come to me up front, hey, I filed my taxes last year and I didn't file a loss. There's an income on there. What does it need to be? So, I look at their tax returns. I tell them like, oh, here, it looks like you, after, all the things we subtract and add or whatnot, looks like you made $70,000. How tax returns work is you have to have 2 years. So we're going to average that out. So if you had a big loss last year, like, oh, you didn't make 70,000, it looks like you made, negative 22. That next year better be very, very high, or it's going to be, how do we average that?
Right.
Now, the good thing about it is we don't necessarily always have to use tax returns anymore. And that's the thing when it comes to barbers, hairdressers, they all make cash. So I do have some hairdressers, they file their monies, they do their books, however they run their business, and they're able to get their tax returns down to where they're showing an income. Sometimes it's not a lot, but it's also not a loss, right? But we also have other loans that don't require tax returns. For example, we have a loan where there's no employment, no income, no employment. Now, what happens in that case is, okay, we can do this loan, but it's not going to be the minimum down, 3.5%, 5%. Now we're talking a non-standard type of loan. It's going to require more monies. So if we're not looking at your employment or your income, that means 20% down, and you have to have 12 to 18 months in reserves. That all depends on your credit score. So can it be done? Absolutely.
Right. So that's where cash is king in that situation.
But the monies has to be seasoned. And that's the thing. A lot of hairdressers and a lot of barbers, they have monies. They have it sit in the bank. They season the money. But a lot of people don't realize, like, you can buy a house just because you don't fit in that standard financing box that everybody's used to. There are loans out there. There are people who are 1099, and we don't look at the tax returns. We can use your 1099 for your income in lieu of that tax return.
Yeah, and a lot of barbers who are on commission, that's how they get they get that document.
Yep. So there's that program that we can do because most barbers, by the time they've contacted me, they've been barbers for 5 years, 4 years, 7 years. They've been in for a while. Because you do have to have 2 years history. So if you're new and you don't have that 2-year history, I can't do anything about that because they still need
2-year work history or
2-year self-employed
meaning
history.
That they filed the taxes for at least 2 years. So they could have been a barber for 10 years, but if they've never filed a tax return.
Correct. Because to me, you're new. If you don't have these said documents. Oh, you've been here for 10 years? Okay. But we need to be able to show that documentation because here's how I tell everybody when it comes to a loan. There's layers in a loan. So the more things that we can't do, like, on a standard loan, when you have a W-2, you have your pay stub, the risk layers on there are lower. But now if we're talking, okay, you're self-employed, that's already a high risk, right? Now, oh, you've been self-employed for just 2 years. Risk. You know what I mean?
Risk. Okay.
There's so many risks. So it's like, oh, you have a lower credit score? Risk. So we want to remove some of those layers, So it's like, okay, if you've been self-employed for 2 years on paper, right? And, your credit score is 780, that reduces some of the risk. So everything comes with some kind of risk layer when it comes to financing.
Right. And so what is a good credit score that reduces that risk that you say, okay, credit score is good. That's not a risk. We're good there, but maybe some of the other things we have to work on. But, so
if you're an individual solo person on the loan, 720 is going to be where you want to be.
Okay.
Now, if you are a couple, let's say 2 people on the loan, what will happen is that is less of a risk because now there's 2. Because usually when there's 2 people, somebody's going to have the higher score, someone's going to have the lower score, right? So if there's 2 people, that will reduce the risk even if that qualifying score is lower because there's still another person on there.
Okay.
So 720 is going to be ideal for conventional jumbo, but that's truly on the lower end. It's just the lower good score.
Gotcha.
When it's FHA, the true qualifying score for FHA and VA is 500. Yeah. But that is a high risk loan and does require more monies down. They do require on FHA, if your score is from 500 to 579, you have to put 10% down. For VA, they will. Some banks will let you go 100.
And then just kind of tell us what is FHA and what is VA? What are those things?
So FHA is a government funded loan. So that is more for people who've had situations, bankruptcies, foreclosures, lower credit scores. They're a lot more lenient because they do have that government backing. VA obviously is for our veterans who've served for us, and that they have awesome loans. That's a great benefit, which a lot of people don't know about. And I do find that there are some veterans who are turned barbers. My dad's actually one. So, I don't know this until I talk to them, and I always ask, is there any VA, history? There was a gentleman who's a barber who I happened to ask that question. He's like, oh yeah, I was in the military. I'm like, well, what about your VA financing? Well, how do I find that out? So he ended up finding it out, and he had it available to him. So I'm like, this is such a better loan. But the thing about it is you have to have the tax returns, because I can't go VA and then no income, no employment. Those two don't work together. So you have your standard loans, your VA, your FHA, your conventional, your jumbos. Then you have your non-QM loans, basically, that are your bank statement loans, which that's another loan that we could do for self-employed people. You have your 1099 loans, your no employment loans. You have your DSCR loans. That's your investor special. Mm-hmm. Yep. So there are a bunch of different type of loans. Bank statement, now that we're saying that out loud, that's another good one. But that obviously requires you to put your money in the bank. Not at one time. Not like, oh, I know, I could put it in. Here goes all 80,000 of it.
Go grab it from under the mattress and go put it in the bank. Consistent
deposits, because that's the thing. It depends on how you set up your business too. Because if you're a barber, right, and you're like, hey, this is, Lamar's Barber Services, and that's what your business name is, and you have these business bank accounts, and you put your monies in there, and then you pay yourself out into your own. If that's an easy way to track your deposits, it's not a hard loan. We just take 12 months bank statements. They do the deposits and they calculate it. And that's what we use as your income. I've done quite a few of those. They sound like a lot, but they're really not bad.
Yeah.
And another thing, when it does come to these different type of loans, it does, because they're higher risk, it's higher rate. So it's not like I'm giving this person a 2 and I'm going to give you a 10. It's usually like a, 1.5, maybe 2, 3% higher than market, because we got to think about those risk layers.
So the more riskier the loan, the higher the rate. And the risk is basically based on credit scores, income, how all the things you can prove.
Correct.
The more you can prove, the less risk.
Correct.
You are.
Correct.
Okay. So having those tax returns, bank statements, credit scores, working on that. And what was the other thing? There was one more thing, I think, or was that it?
1099.
1099. So any documentation is going to be very important when it comes to home purchase. And so now, what would you say to those people? Because that could be intimidating. Man, I got to do all this stuff. And having gone through the home buying process a couple of times myself, in the beginning, it was very intimidating. Like, I don't know where to find this stuff.
Right.
Where do I find this stuff?
Right.
So now it requires some research, some time, and some effort to get it done. And it can be frustrating. So what would you say to those? What would be your advice on that?
So, I have talked to those people who they don't know where anything is. I don't have that. What do I need? It's really about how you're going to organize, your books. So even for me, in my personal own business, I manage myself like on QuickBooks, and I have to put all of that stuff on paper and just kind of keep everything with it. My tax preparer, you know what I mean? So I know where I can obtain that. And that's the thing. If you're starting from absolute scratch, like, hey, I've only, filed my taxes with, H&R Block 2 years ago. I got to do the next 2 years. I do partner with like tax preparers. I do partner with people who can help get your finances in line together. Because if they talk to me, okay, hey, so-and-so is looking to purchase a home. He's been a barber for 6 years. He's got 2 years returns. He needs to file the last 2. This is what he's looking to do. We're getting all on the same page. So it's good when, you tell me, oh, hey, here's my tax repair. I let them know I want to buy a house, but can you talk to them? Absolutely. I'll give them a call, let them know what the goal is. And we just kind of check in every 3 months or so, because it really doesn't take a lot of time. It takes as much time as you're going to put into it and how much you really want to purchase the home. But once you find like a good tax repair, CPA, some kind of accountant that's going to help with that finances, they're going to hold everything that we need. You know what I mean? Now it's just up to you on how you're going to deposit your monies or record your transactions.
And for those who are in the market for home purchase, or they think they may not be, I don't know, they may not be ready. A lot of people may run to the realtor first.
Yep.
What are your thoughts on that, or what is the correct order of things?
So it's always going to be getting your finance person first. So I'm always the first step. And then from that point, once we get you all qualified and you're good to go, we get you qualified to 500. We then, get you over to the realtor. Now, you very well can have a realtor. If you don't, I know a few I can partner, I can pair you up with, but a realtor can't help you when they don't know what you're qualified for. Nobody's really going to run you around town looking at homes that you hope you can buy. And then to come to find out you've only, filed 1 year return at a loss. So we set up everything here first before we get you out going, because the one thing you don't want is going out to finding a house, you fall in love, you're ready to buy it, and you don't qualify for certain reasons. So we just try to, set the expectations all up front. Like, look, this is what you're qualified to. Like, I know you like that 1.4. Just drop the 1. We can get you here, but you have to have a step 1. And a lot of people, it's very overwhelming, especially if you've never done it before. And it can be intimidating. But once it's done, it's like you just feel more organized. You feel better. So I suggest people, let's talk, let's come up with a game plan. And, I try to pop in on people every 3 months or so if they don't hit me up first. And, a lot of people who are very serious, they're calling me way before I'm calling them. Like, hey, I've done this. Hey, I got my tax returns done. I've done this. And, it's just how much you want it. Because you can buy a house, it just depends on how much work you want to put in to getting yourself organized.
Right. With all the possibilities. So there's so many possibilities, different loan programs that you could qualify for, based on certain criteria. So if there is someone who is not ready, right? So they're just getting started, and you're walking them through that process. And like you say, you check in with them every 3 months or so. How often does that happen for you? Do you have a lot of people in that situation? Or this episode is brought to you by Leonetti's Barber Supply. We've been in the barber supply business since 1968, helping barbers deliver their best haircuts. We're located at 1633 East McDowell Road, Phoenix, Arizona, 85006. We've got everything you need. We've got your clippers, we've got your trimmers, we've got your disinfectants, everything you need to help you deliver your best haircut. Now let's get back to this episode.
Not too many. I mean, even there's people standard financing who can't qualify at this time, and we have to put them on some kind of plan. So as far as that, it happens not too often, where people need a long time. Sometimes it could be a matter of, you could do this in 3 months if you know what I mean? So I would say, yeah, every now and then it happens. Not a ton, but I do think people, once we've spoken, they feel a lot better, because I do this every day, my mind just knows what to do, So when I talk to people, they're like, oh my gosh, that's it. Because in my mind, I'm thinking, well, if you don't know any of it or you don't have any plan, this might be overwhelming. Some of the people have everything that you need right then and there. I actually have a loan in process right now by a gentleman who I met on Facebook. And I was tagged on a post. I messaged him because he said I had a question. The post was up for 30 minutes. Nobody helped this man in this question. I hit him up, and he's like, on my credit, there was a bankruptcy. We had these kids, blah, blah, blah. I'm like, okay, so I'm waiting for the real problem. He's like, but nobody's ever been able to help me. That my score didn't qualify, whatever. So pull his credit, qualifies. Bankruptcy, we're past that time. I'm like, okay, well, what couldn't they do? He's like, well, I don't have a 680. And I'm like, well, what did you need that for? And he's like, because that's what I need, right? I'm like, no. So, long story short, we're just waiting for the appraisal. And he's like, thank you so much. I didn't know. He kept saying something about somebody had told him that it takes 30 days to report a trade line, something about his credit. And that's another thing. It's like, I don't know if it was somebody who told him, if it was a professional in this business that told him, if it was the internet that told him. My thing is, it's like, find you somebody who works well with you, me, and we set you up on a plan. Yep. And that's all it is. And once you see what you need, it makes things a lot easier to focus on. But when you think you have to pay off all your credit cards and you have to pay off your car and you need that 680 and you need 20% down, that's overwhelming. Who has all that now?
Right.
But you don't need all that.
You don't need all that. And that's a great lesson in general in life, because a lot of times we get intimidated or afraid to move forward in doing something just because of the information we don't know or what we think we know, and it's not the truth.
Right. And then when you find out the truth, you're like,
I should have did this a long time ago.
That's all I needed?
Yeah.
I could have gave you this.
Right.
I know. So I had been harassing you to get me what you need, and that's the thing. Once, and I tell you, when I do have these conversations with these people who don't in this moment qualify, when I tell them what needs to be done, they're like, thank you so much. That's all I needed. I can get this done in 2 months.
Right.
And there are some people who are disappointed because they're ready right now. But your situation's not ready right now. And the one thing I do know of some people is if you don't give them the answer they're looking for, they will find the answer they're looking for. Now, somebody at some point is going to tell you yes, but the reality is, if it can't be done, it can't be done. You know, so if there's 85 people telling you it can't be done, I don't know if I'm going to trust that 86th person who tells me they can. How, Yeah. So sometimes you do have to kind of step back and okay, let me look. I know you want this now, but there are reasons it's not happening for you in this moment. I'm not saying it can't, but let's just get you on a better path, Yeah. And that's all it is, just setting you up.
Yep. And then, so one last question I got for you. What would be, or what's the difference going through you versus me going directly to Chase or Wells Fargo, going directly to the bank? What would be the difference?
I'm funnier. Just kidding. So honestly, you can walk into the branch and you can give them all your things. And I worked for a big bank for quite some time. What I am finding is they just take your things and your verbal, word. Mm-hmm. Not that I'm calling you a liar, but I'm just, there's your word and there's this pay stuff. And they just kind of take it and then they get you qualified. Mm-hmm. For me, when I got started in this business, I went through operations first. So I was a loan processor for many years. Then I was a loan officer assistant for years. So I learned the back way. Mm-hmm. Then I went to sales. So I do everything that I can up front. We're looking at pay stubs, bank statements, W-2s, tax returns. We're going to get you ran through our automated underwriting system for an approval, and we're going to use that. And the difference between a pre-qualification and a pre-approval, the pre-qualification, you're just qualified to go find you a house, right? Once you get into a house, now you're actually pre-approved for. You're not fully approved for this house until everything is done. Now, You know what I mean? Because all kind of things can happen in this process.
Right.
But I do everything up front. You're going to give me all the things. And that way it makes your transaction a lot smoother. I don't want you 2 weeks down and I'm like, hey, you ever going to get me that pay stub you said you were going to get me? And then I find out you only make $7 an hour, but you told me 70 and maybe I just heard you wrong. Right. You know what I mean? I don't know. I got to see it. So that's the big difference. You can go to any of these branches, but when it comes to that, I just say, find you some other options just to compare. On the broker end, it's just like an insurance broker, any kind of broker. They're going to do this shopping for you on your behalf because they want the best loan that's going to work for you.
Right.
That's the biggest difference.
Yeah. And I know that there's some companies out there that, you may not talk to the same person ever again once you get started with them. They pass you on from department to department, and everybody has a job in their process. So you're not really building that relationship with that bank or company or whatever. And so I know with you want people to come back.
Yeah.
Right?
Like I want to be the person you think of when, hey, we've had us, 2 or 3 kids. We need to get a bigger house, or our children have left for college. We want to downsize. I want to be the rates have went down. I want to refinance. I want to be the person you're thinking of when it comes to that financial move. Because if you go to A or B company and they've ran you through this whole line of departments and people, it gets kind of frustrating. For me, I know personally I don't like it.
Right.
So I like one point of contact, maybe even 2, maybe there's an assistant or a processor attached, but it just makes you feel a lot more comfortable because you're not telling your scenario over and over again. Or like, yeah, I talked to a gentleman last Thursday and he told me blah, blah. Oh, who was it?
Yeah.
I don't know. So that's the one thing that I think it's great. A lot of people go to where they bank, and that's fine if that works for you. But, I realize that there's people who don't even know that there are mortgage brokers. I think people think if I need a mortgage, I need to go to my bank. But there are people out there who can get you a different loan. Better loan, a different rate, a better program.
Right, because the banks, you go directly to them, you have to check all their boxes. And if you don't fit in that box,
they tell you no. And then now you're discouraged because they couldn't help you. Just because they couldn't help you doesn't mean you can't be helped. They just couldn't help you.
Right.
Because when you go to one bank, they only have one set of products. If they don't offer a product that fits your scenario, just because they told you no doesn't mean like, oh, well, fit in this box. No, you just got to just find, one that's going to work best for you. And that's just really what it is. And I don't think people they don't know that. So.
And then one last question. So when it comes when it comes to the rates, right? So everybody gets stuck on the rates, the 2%, the 5%, the 7%, 8%. Should that be a concern to the person, or should it be, can I afford this house and let me just get in and then figure it out from there? Yeah. What should be the thought process?
So my one question I always ask people when I talk to them is, what is your max payment that you do not want to go over monthly? Like, this is your house, you're going to pay your principal, your interest, your taxes, your insurance. What do you feel that you don't want to go over? And they're $2,500. Okay. So if the rate just happens to be 6.7, but the payment's 24, we're good. So a lot of people are okay with it now, but I tell people you're not stuck in this loan forever. You can always refinance. When these rates go back down, they're not going to go in the 2s, but they'll go down. You could take advantage of a refinance, and that's where we just basically go in.
If you made your payments on time,
you have to you did what you were supposed to do.
Right.
You made your payments on time. Your score is still good. Your credit card, you've been managing your money. You can go and you could do a refinance, and then we could just lower your interest rate. I don't think it's a good move to wait for rates to go down, because as these rates are fluctuating back and forth, these home prices are too. They're going up. So now you finally got that 3.7, but that house that was, 410 is now, 515.
Right.
You might as well have got in at 410 at 8% and then just refinance down to your 5, and now you have more equity. Right. You know what I mean?
Yeah.
So, yeah.
Yeah. Awesome.
No, don't pay attention to the rate that much where it's going to stop you or prevent you from, purchasing a home, because it's real estate. You know what I mean? Like real estate, we're in the valley that's so many people are moving to daily.
Yeah.
So we're not going to be out here, low on, the houses, they're going to keep building them. Like there's such a high demand. So the values are going to continue to increase out here. That's just, the reality of it. But these rates are going to do what these rates do. So find your house, find something that's comfortable, because at the end of the day, if you are in your apartment renting your home and they say, hey, your rent is going up $400, you're going to pay it, because where are you going to go? Because if the rent is going up here, it's up everywhere. So why does it matter if this rate went up 1%? Because your rent just went up. You know what I mean?
Your payment is not going to change.
Correct. So if
in most cases, it actually might go down.
Correct. So if the rates go up, rent will always increase, because if you do not purchase, you will rent. So they can do that. You know what I mean? So it doesn't matter if you don't want to purchase a home now, but you're going to, at the end of the day, still rent. So don't come yelling at me.
Somebody's going to get your money.
Yeah, don't come yelling at me because I only can give you a 7, you know? Did you yell at your landlord? Right. You know what I mean? Like, no. And at the end of the day, like, you are going to pay it because you have to have somewhere to live.
Right. Yeah. Now, one last question. Are you seeing with these increased prices, are you seeing like multi-families coming together to purchase homes?
Yes. I have a couple. Well, it's a couple and a teenage. Oh, he's not a teen. He's a young boy. He's like 23. They are purchasing the home together, and it's a house with like a casita situation. And that's just kind of the reality of things are right now too. Like, we're not jumping out at 18 or 19 to go rent a place because rent is high, you know? Right. So they just designed it this way, and it works for them, you know? Right. And you see in these new builds, a lot of those homes have casita options. A lot of the homes have that next gen suite for situations like this. And I think it's dope. I think it's a great idea.
Yeah.
And it helps, you know, especially when you're younger like that, it helps you with established great credit, you know, because are you going to be with your parents forever? Maybe not. Maybe. Right. You don't know. But it's a great thing. But I do have those.
Awesome. Well, I'm going to thank you for joining us today on the Barber Block. And
thanks for having me.
Absolutely. Dropping those gems, sharing that knowledge on the mortgage industry and the home buying process, and that, you know, regardless of what you think, you may be able to qualify, that there's something out there for everyone in the home buying purchase. So where can they find you? If they want to get in touch with you, what's the best way to reach you?
So you can look on my website. It's www.mortgagesbymisty.com. You can also call or text me, 619-548-5264. I am located in the Valley. I'm just from California, never changed my number. It's stuck. Or you can even go on Instagram and Facebook, and I have both. Check me out there. And
awesome.
Put you in a house.
Awesome. Let's get it done.
Yep, that's right.
All right.
Thanks, Lamar.
All right. Thank you.
Thanks for having me.
Absolutely. And stay tuned for more. We've got more episodes coming up. We're going to keep bringing you more value, things that pertain to your wealth, to your building your generational wealth, your finances, and just helping you to, do business well and hone in on your craft. And we'll see you next time. Peace out.